Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Thursday, the 1st of December. Can you believe that? We're already into December. You know, now more than ever, maybe personal MarketClub coaching is right for you. You know, the consultation and the call are both free, so give us a call at 877-219-1482. I think as we go into 2012, there's going to be some amazing opportunities for trading, so I think this personal coaching can really help you do well. So here we go. The United States of Europe. The only way that Europe is ever going to be able to function is to be totally united under one banner and have one central bank for all 17 Eurozone members. And that, my friends, is never going to happen. So what is going to happen? No one knows for sure how what's going on in Europe right now will play out and affect the markets here in the States. What's going to happen to the dollar, the euro, crude oil, stocks, and gold? One thing is for sure. There will be some historic opportunities to make money. We are going to leave it to others to figure out what's happening in Europe. We are going to focus on our core mission, and that is to help you make money in the markets. You know, there's nothing wrong with capitalism. The only way I believe to be successful in 2012 and is what we preach here every day at Market Club, and that is to have a disciplined approach. If you're trading on rumor and hot tips in 2012, you are not going to be happy with your results or have a successful year, in my opinion. At Market Club, we have some amazing tools that will help you become a winner in 2012. These tools include our Trade Triangle, Smart Scan, and Talking Chart technologies. All of these powerful, easy-to-use tools will help keep you out of harm's way and on the right side of the markets in 2012. Now let's go to the charts and the video and see how we can create and protect your wealth for the balance of this year. Now we've got some very interesting things today. We're going to be looking at a couple of ETFs. We talked about them briefly last night on our show, our Market Club show on Wednesday nights, every Wednesday at 5 p.m. Eastern Standard Time. So let's go to the charts right now and see what we can do. So here we are. We were looking at the S&P 500. Now the S&P 500, it was a 55 last night. It slipped to a 65 today. And basically, you're in a kind of a trading range. You know, we're sort of trapped in this very broad trading range and really no direction. Our longer-term tools, our monthly and weekly trade triangles are still negative. Our daily is positive. Now, that turned up, actually, just you can see it turned up on Monday. So that was the first clue that things were maybe changing. And, of course, they did change with the big announcement yesterday from the central banks and also from China easing its restrictions on bank agreements. So that was one thing, two things that really pushed this market up. Now the question is, this is a very important low. Now this was a 61.8% retracement, and I'll show you how that works. We've done this before, and I want to keep doing it until we get it right, and you understand how important these Fibonacci. Look at the Fibonacci, 61.8%, right on the money. This market closed really badly on Friday. It should have followed through. The fact that it didn't follow through reinforced this zone, this 61.8% Fibonacci retracement. We got a daily trade triangle, which further, the market doing this on a Monday was very, very unusual. We did not expect it. Certainly our trade triangles didn't expect it, but they kicked in anyway, and that's the beauty of being disciplined and following a game plan. The move pushed this market up. I'll take this off the screen, of course. The move pushed this market up over the PSAR, which is the parabolic stop and reverse, indicating that a bottom has been put in place. We were at the lower end of the Donchian trade channel. Now we're kind of in the upper half of the Donchian trade channel, but we still haven't turned our trade triangles positive. Moving down, looking at our two other indicators, the Williams percent R, which is an oscillator for trading range markets. We're just sort of getting into an overbought condition, not quite there yet, but very big volume yesterday. And look at this PSAR, just about to turn up. If we close higher today, it will turn higher, and that's an indication that maybe we're making the turn. But the other thing, well, we talked about this again last night, but we'll talk about it again today. As we scope this out a little further, you can see, I'll put my telestrator on. I want to show you something quite remarkable in terms of cyclicality. And what it is this, if you look at the relationship between the different days, as we often do, is this. If you make the low right here, and you go to this low here, it's approximately 39 days. If you go from this low to this low, it's 38 days. Seldom do you see them so close, but this is very, very close. And maybe the reason it was 38 days this last time was because of the Thanksgiving holiday. There's no trading that day, of course. So I would say that this potentially could be a interesting move. If it's true that we could see a move up, but the key thing here in my mind is to really look at this level here, the 1300 level. That's where we have to go to really get everything going in a very, very strong trend. All of our trade triangles would turn green, and that would be a very strong upward trend, in my opinion, if we close a move over 1300 on the S&P. Now, is that possible with all the problems in Europe? I don't know. It doesn't matter. If the market's going higher, and this is the key thing I learned as being a floor trader on the exchanges in Chicago, it doesn't matter what I think or what anybody else thinks. If the market's going up, you want to be long. If it's going down, you want to be either out or short. And that's exactly what our trade triangles do for our clients and our members. So let's just clear this off the screen. Go to our next markets. I'm going to go back to here. I'm going to skip the Dow and the NASDAQ. It's pretty much the similar picture there. We're going to look at silver. And the silver market basically is in a very, very sort of trading range. It's minus 85, indicating the trend is still down there. And as you can see, we sort of haven't gotten anywhere in the last couple of months. If you go back to October, late September, October, really nothing going on there for the moment. I think we may have to wait until 2012 to get this market reunited and excited again on some sort of mission. But longer term, our weekly and monthly trade triangles, as you can see quite clearly, are negative. Only the daily is positive, indicating that we've got some support coming in right at these levels. And that's right around, if we look at the levels, right at 30.50, around 30.50. That's $30.50 dollars for 1 ounce of silver. So there you have kind of like a sort of a base for the time being. Generally speaking, though, the odds are it's 50-50 now. It's going to go higher or lower, but certainly there's not a lot of enthusiasm to push this market higher. The one thing that is positive, it did move over the parabolic. You can see right here, indicating that the downward pressure has at least alleviated itself for the time being. And also, if you go back here, we haven't quite turned around there yet. So we want to pay close attention to that market. And let me just take this off for below chart starts. I'm just going to take the volume off. I don't need that for the time being on these markets. Now, silver and gold, we have 24/6 coverage on those real time. So they'll be incredibly important markets in 2012, and that's why you really want to be disciplined in your approach there. So let's go back to our next market, and that's going to be gold. Gold's taking a little bit of a profit taking today. You can see it's up, it's come down, and it did move over the parabolic. This is a different picture, however. The monthly is positive. The short, intermediate term weekly is negative, and we have a score of 65, indicating a trading range in this market. Now, there again, we need to go over the $1,800 level in a convincing fashion to get this momentum going. I don't think that's going to happen until 2012. And I think it's going to probably make its high sometime in the May-June period. But there again, you can see how flat this is. It's really not a lot of enthusiasm to push this market either way at the moment. So let's go to our next market. The next market's copper. Now, copper is a little bit different because we've talked about copper being a sort of metal that's reflected very closely to the economy. And as you can see, we had a nice move, big move up yesterday. Of course, that followed the huge move up in the equity markets, and now we're sort of seeing a little bit of a pullback, a little bit of consolidation, you could call it. But generally speaking, it looks as though the market is somewhat mixed. It's a 65 score. Even though our triangles look like they're all down, it's actually a little bit mixed because we had a big picture on this one. We'll talk about that maybe tomorrow when we have more time. But it's a 65, more of a trading range right now. So you're trapped in this, basically the Donchian trade channels. These are just default settings that we have at MarketClub. I'll show you basically the on-chart studies. You can see default. You can move them around here. See how it moves this if you want to do that. Of course, you can do that, but just hit reset. Puts it back to where you want. Same with the parabolic SAR, and that's just the de facto settings. I don't think you have to really do much more than that on those. So copper, trading range for the time being. Same with silver, and gold looks to be a little bit more friendly to the upside, but still it's got to consolidate a little more than it's doing right now. So next market, crude oil. Now crude oil is in a, this is kind of like the shining star. It's plus 90. However, today's action is a bearish engulfing line. Now it's a very important thing in Japanese candlestick terms. And let me scope that in just a little bit closer so you can get a close view. What it means is this, is that the day, and I'll put my telestrator back on here to show you. It means this day here is the high opened here on the high and went lower, and it's totally engulfed the action in this bar here. So it's engulfed the entire body of this candle. That's a bearish engulfing line. Now tomorrow, meaning Friday, if we close lower, let's say we have a bar like that, it would indicate that this is in fact confirmed this is a top. Now we've been a little bit concerned about the price of crude oil over $100. We said between the 102 and 105 area I think we were looking at, but this is the previous highs, and you can see how that area right there is really presenting a problem for this market. I think it's 103.75 was the previous high, but again, today's action could be indicative of a potential turn, and we'll only know this tomorrow when we see this market close. So we'll see how that works out, but generally speaking, that's a cautionary flag right there. And if I just take this, let me go and take this off the screen, clear this up. If we look at this as a cautionary flag, you've had, was it 1, 2, 3, 4, 5, 6 days in a row. It's very, very difficult for a market to have 7 days in a row in one direction, and we saw that with the S&P last week, and we saw the reversal there. So I think potentially this could be something as a little bit of a cautionary flag, but generally speaking, all the trends, all the major trends, monthly, weekly, and daily, are all positive right now. So going to our next market, and that's going to be the dollar index. This is really interesting in the sense that we had this looks like it's forming a doji line. There's a negative engulfing line, for example. That was an indication. When you get a line like this, it usually tells you there's a uniformity between buyers and sellers. There's not enough buyers to push it much higher, not enough sellers to push it much lower. And of course, you've had it like 3 days here, and you look like you're putting one in today. So it looks like the 78 level, as we say in our comments today, is support. But generally speaking, the longer term trend, the monthly and the weekly, is still positive. We are seeing we're not quite in an oversold condition yet, but we want to watch that carefully. But the MACD is just beginning to roll over, so I'd pay close attention to that market. Let's scope this out a little bit more data so we have an idea. But generally speaking, we come back to the midpoint of the Donchian trade channel, and sometimes that offers support like it did here, and then you go back up. So I think let's give this market some time to digest what's going on in Europe. So next market is going to be the Reuters Jefferies CRB Commodity Index, and this is definitely the one to watch. We talked about this extensively last night on our show at 5 o'clock. If you haven't seen the show, it's up on the blog and you can watch it there. But generally speaking, this is the one to watch for inflation. Now, I was just talking to my wife this morning. She said, the things are really getting expensive in terms of the costs. These sort of hidden costs are being passed along, but things are getting more expensive. And this is just like the problem with inflation, so sneaking into our economy here in the U.S., and it's going to definitely be a problem. Now, especially, this is definitely going to be a problem if we see this market go over the 325 level, which is right here. Now, we're currently trading at 312, which is about halfway there, but again, our trade triangles are negative on the monthly and the weekly, indicating the trend is down. It will look as though we're going to go a little bit lower, and certainly today's action is telling you that, at least in the very short term. But let's take a look at our next market, and these are the markets I promised you we'd look at. These are two ETFs. One's a Russian ETF and one's a Brazilian. These are part of the BRIC format that we carry at MarketClub. That's the global ETF strategy portfolio we publish every day, and it really is kind of interesting what's going on here. And I'm going to look at the Russian one first of all, and that's actually performed very well yesterday. Moved over the PSAR, and also it looks as though it's just trying to turn up. It hasn't done that yet, but the reason I want to show you this is because I want you to be mentally prepared to do something with this market. Again, a couple of things have happened, and I want to show you exactly the numbers we're going to be looking at to really get excited about this market on the long side. So here we go. If you look at the lows here, the lows here, and the lows here, and again, this is what we're looking at. This was 39 days right here to here, and this was 38 days to here. Now, what this is interesting to me is this. Now, we do have our the negative monthly and the weekly, so it's not a time to buy it now. But what I want to just share with you with potentially what could happen here. If we were to see the market move over, now this is the number we're looking at. If it moves over 32.68, all of these triangles will all be green. And that means a very strong trend. What also it means is you've got a really, we think this is also a potentially big energy field or head and shoulders base. And if that does carry out, we could see this market go to, well, certainly I think we could see it go to the 40 level, which is right around where we are right here back in August. So that's potentially a good trade to look at in 2012 and get ready for mentally. That's the big trigger point right here, 32.68. So that's definitely where we want to pull the trigger and get excited about buying this market and getting aggressive. It's Brazil. Excuse me, this is Russia. What does Russia have? Oil. What does Russia have? Gold. Very, very important elements as we move forward here. So let's clear everything off the screen. Go back to our next market that we want to look at, and of course that's going to be the ETF. These are both ETFs, by the way. This is the one from Brazil, and we carry this portfolio in our MarketClub section, and you can see the exact same pattern here on this particular ETF, and just there's the movement we're looking at, and there's basically, you can just draw a trend line across here, and the number there to look at is right here, and it's 64. That's right, 64.53. So if we see the market go over 64.53, all of our trade triangles here will be green, and that will indicate a very strong upward trend. So what I want to show you, just to get mentally prepared, if we're correct, this is in fact a head and shoulders base, or an energy field as we some like to call them. It is definitely to your advantage to keep an eye on this ETF, because if it does move over here to this level, we definitely want to be long, because the potential is for this market to go quite a bit higher, about, I would say, around the 78 level, which is right around here to here. The 76 to 78 is right there, and that would be our target zone. So that's definitely something. Looks like I'm running out of ink here, but that's the target zone we'd be looking at for this market once it goes over 64. That'd be a nice little profit to start out in 2012. Hey, I'm Adam Hewison for MarketClub. I'm glad you had a chance to stop by today and let me share with you some of the knowledge I've had over the years I've traded, both as a member of the Chicago Mercantile Exchange and several major exchanges both in Europe and here in the States. So don't forget, if you have a chance, give us a call for one-on-one MarketClub coaching. The consultation and the call are free, 877-219-1482. I'll see you tomorrow, same time, same place. Have a great trading day.